You're listening to Uranium Spotlight, brought to you by PurePoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, PurePoint is investing in Canada's uranium future. And now your host, Chris Frostad.
It's Tuesday, September 30th, 2025, and this week on Uranium Spotlight, long-term uranium prices finally break higher. Sprott steps up its physical buying spree, a court ruling freezes Niger's uranium exports, and Russia expands its global reactor deals with BRICS support. Uranium's long-term contract price finally blinked last week. After holding steady for more than a year, it climbed by $2 to $82 a pound. That matches the spot price at $82, but the significance here is in the signal the term market is sending. Utilities rarely adjust long-term contracting benchmarks without good reason, and this shift reflects the persistent upward pressure across the entire fuel cycle. Spot activity was certainly lively, with more than 3 million pounds traded hands, but it's the forward curve that matters for developers and producers. The 3-year forward price is now at $90 a pound, and the 5-year sits near $98 a pound. These numbers tell us that buyers are starting to price in sustained tightness, not just a temporary squeeze. Elsewhere in the cycle, conversion and UF6 markets are also firmed. North American UF6 values jumped by $20 this month to $277 a kilogram, closely tracking the rising uranium component. Conversion prices softened slightly on the spot side, but term conversion offers remain firm, highlighting the utilities are still working to lock down future supply. For investors, the real takeaway is that the long-term price has finally caught up with the spot. When contract benchmarks rise, they validate higher incentive prices for new mines and strengthen the economics of existing projects. This is the type of signal utilities, producers, and the capital markets have been waiting for, and it underscores that uranium's supply-demand imbalance is no longer just a spot market story. If you haven't already, be sure to subscribe to Uranium Spotlight Podcast, available on your favorite podcast platform or on PurePoint Uranium's YouTube channel. The Sprott Physical Uranium Trust, the largest holder of uranium globally, now controls more than 70 million pounds. Over the past 2 weeks alone, they've added 1.4 million pounds, including 950,000 pounds just last week. That brings their third quarter purchases to 2.3 million pounds in total. At current prices, Sprott's uranium inventory carries a market value of roughly $5.5 billion. Analysts suggest the trust is preparing to continue raising funds, and with utility contracting expected to accelerate in the seasonally strong fourth quarter, further near-term buying looks likely. The market response has been immediate. Uranium equities rallied broadly as Sprott's activity reinforced a trend that's been building for years: physical pounds being removed from the market against a backdrop of constrained supply. But it's important to remember that the spot price only tells part of the story. Most uranium is transacted through long-term contracts, many of which remain confidential. The public deals we do see point to a strengthening forward curve, with 3-year prices around $84 a pound and 5-year prices around $94, both creeping higher in recent weeks. That suggests utilities may already be locking in volumes at levels above what is visible. For investors, the message is clear. Sprott's buying matters. It tightens an already tight market, but the real pressure point is production. Cameco, Kazatomprom, and smaller producers like Paladin have all trimmed their output guidance for 2025 and 2026. As supply expectations ratchet lower just as long-term contracting gathers momentum, the leverage increasingly sits with the miners, and equity valuations will follow where those fundamentals lead. The World Bank's International Court has ruled that Niger's ruling junta cannot sell, transfer, or facilitate the transfer of uranium mined at Orano's Somar mine. The background here is important. In December 2024, Niger's military government seized some air from Orano, after already blocking Orano's permit to develop the massive Imoran deposit early that fall. The junta, which came to power in a July 2023 coup, has been moving to exert greater control over Niger's resources while distancing itself from the West and drawing closer to Russia, China, and Turkey. Orano, a French state company, is directly caught in the middle. France and most Western powers don't recognize the junta, which leaves Niger looking to sell these assets to new partners, yet the court's ruling prevents it from doing so. Until this is resolved, the uranium already mined at Sommer, about 2.2 million pounds, remains locked in the country under export restrictions. Adding to the tension, the head of Uranium mining Niger was recently detained by Niger's security agency before the court ordered his release. For investors, the key point is that these geopolitical standoffs further tighten an already constrained uranium supply picture. Niger has historically been one of the world's top 5 producers. Any disruption there, layered on top of delays and underperformance elsewhere, magnifies the structural shortfall in the market. Situations like this don't just affect supply, they harden the floor under uranium prices and reinforce the case for exposure to uranium equities. Russia has been busy on the nuclear front this week, signing new deals to build reactors in countries across the global south and east, including Uzbekistan, Ethiopia, and Iran. The standout is Iran, where Moscow has agreed to construct 8 new nuclear power plants in a package reportedly worth $25 billion. While details on the exact reactor count weren't disclosed, 8 plants suggest at least that many reactors, likely more. Ethiopia and Uzbekistan also signed on, each committing to the development of a nuclear plant with the number of reactors yet to be specified. But perhaps more important than the deals themselves were comments from President Vladimir Putin at the World Atomic Week International Forum. He emphasized that nuclear financing needs to be treated as a global issue and highlighted the new development bank, the lending arm of the BRICS nations, as a potential backer of future projects. With BRICS now including heavyweights like China, India, Saudi Arabia, and the UAE, the scale of potential capital behind this initiative shouldn't be underestimated. Putin also claimed that Russia doesn't require countries to sign long-term uranium and fuel supply contracts when it builds reactors, presenting them as a no-strings-attached partner. In practice, though, history shows that fuel agreements often follow, creating a long-term economic tie between Moscow and its client states. For investors, the takeaway is that Russia continues to use nuclear technology as a strategic lever, deepening influence in emerging markets while potentially securing downstream uranium and fuel supply agreements. This underscores the durability of global reactor growth, even outside the Western sphere, and reinforces the structural demand story underpinning uranium markets. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.